If you're looking to purchase a house here in Northeast Florida, or if you're a real estate agent working with clients looking to buy a house here in Northeast Florida, I want to share some information with you today that'll help you get more deals done. And this is something that I wasn't really aware of because where we are here in St. Augustine, but let me tell you the situation. I have a couple looking to purchase a house here in St. Augustine, and they're on a budget, and housing has been pretty tough for them to find where they want to be at the price they want to pay, at the monthly payment they want to pay. And obviously with interest rates being up the last couple of years, I know we had a little dip in the last week, but the thing is that interest rates are still pretty high for them, and house prices are high here in St. Augustine. So they've been kind of struggling trying to find a piece of property that fits for them. They sent me one today that they stumbled across. They haven't looked at it yet. Sent me the information. I pulled it up, and it's reasonably priced, but it's also coming down to what they can afford on a monthly payment and how much money they have to bring to closing, and also how much down payment they have to put down. So if they went with the FHA route, they'd need 3.5% down, conventional at 3% down. So I started racking my brain a little bit today, figuring, let me just try something, because I wasn't really thinking it was going to work, but boy, did it work. So I went ahead and pulled up the USDA website. I put the address in, and sure enough, it's an approved address. Who would even think of that? I mean, we aren't really in a rural area, but there's a lot of St. Augustine that qualifies for USDA loans. So as you can see, anything that's not in yellow qualifies for USDA financing. And it's crazy that there's so much of it here in the St. Augustine area, and it's very wide open over here. So this is something that a lot of people can use. Of course, there's income restrictions and stuff like that, but there's also a lot of people that will qualify and still can get a lower interest rate than conventional and still be able to purchase a house without even taking money out of their pocket for the down payment. The only thing they're going to have is the closing costs. In that case, too, we could get most of the closing costs paid for by the sellers with seller concessions. So they could go to closing with very little money out of pocket. And we're going to go over that in just a second. But this is a great opportunity. If you have people that you're working with that are a little tight on budget, or even not, even if they're not tight on budget, to get a better interest rate. So if they're not going to do a conventional at 20% down and not have mortgage insurance, this is absolutely a great way to go. So the first thing I'm going to do is we're going to put in the property address to make sure that it works. So I put the property address in here, hit the go button, and it tells me right here, this address is located in an eligible area. That's unbelievable. This is great news for my buyers and great news for anybody out there looking to purchase a house. So we're going to go through this and we're going to pull up the rates and all that stuff. So bear with me. Next thing I want to do is make sure that my clients are eligible for this particular property as far as income is concerned. So let's take a look at that. All right, so I pulled up St. Johns County, and the base income, I'm going to use a rough estimate. I know the husband makes around $5,500 a month, and the wife makes about $3,500 a month. That's the only two incomes. Now, you do have to keep in mind that USDA does require that if they have people working in the house, even if they're not on the mortgage, if it's their kids or relatives staying with them, you have to use all the income. But in this scenario, in this case, it's only the husband and wife. There was nobody else. So I'm going to plug these two numbers in. I'm going to hit the finish here, and let's see if it works. So if you look right here, it says meets the income limits. So they have an annual of 108, and they are good to go with their income. So that works perfect for them. So let's take a look at some more information. All right, so let's take a look and see what the interest rates are right now for USDA loan. I'm doing this on September 26th, 2025 at 7:30 p.m. I'm pulling up our live rates, and let's take a look and see. Now I'm going to use a 640 credit score. Their score is much better, but this is our minimum credit score, 640. So I want to throw that in there as the worst case scenario, because obviously if you have a little better rates with a little better credit. So we're going to use the worst case scenario. So we look at the rates and they are based off the worst case scenario. So it's a purchase at $380, $0 down, $380 loan amount, 30-day rate lock, primary residence, single family, 640 credit score. It's in St. Johns County. So we're going to update the rates and let's see what they look like as of right now. All right, so we're going to get rid of conventional because we're not looking at conventional. We're going to actually keep 30-year, get rid of all these, and we are going to look at the rates. Oh, let me do USDA, and here are the rates. So we're going to look in the points column for something close to 0, so they're not paying anything out of pocket if they don't have to. And right now, we are looking at, this is the closest to 0 without going in the negative. So if you were in the negative, that means we are giving a lender's credit towards closing costs. So let's do that. So the difference between these two is very minimal as far as interest rate. So if we just took this and said, hey, you know what? Let's get some lender's credit towards closing costs. Let's do it. So we're going to go in here and you will see that that will give them another $1,681.21 towards closing costs. So that's great. So let's take a look and see what we have for everything. So I'm going to hit the closing fees, and it's going to pull up our closing fees. So we're going to put the closing date at the 31st of the month. Let me go back, hit the wrong thing here. Then we're going to estimate the homeowner's insurance, let's say $1,600, because it's going to be somewhere in that neighborhood. And I looked up the property taxes, and they were about $3,020. And let's say they put down $1,000 earnest money on the contract. And we're also going to say, hey, we're paying full price. You as a real estate agent or a buyer went ahead and negotiated 2% of the purchase price towards closing, which is $7,600. And let's calculate it out. Let's see what it looks like. So right now, cash from borrower, $3,336.32. So that is what they're going to be taking out of pocket. And let's take a look at this. Here's the monthly payment, principal, interest, mortgage insurance, homeowner's insurance, property taxes. And if they were going to use an FHA loan, which they were thinking about doing, they would need to put as just a down payment, $13,300. So right here, we're about $10,000 in savings of out of pocket, giving them a great interest rate and making it real simple for them to buy the house. So now they're where they want to be. They got a good interest rate. They didn't have to take that extra $10,000 out of pocket. You're able to make a sale. If you're a buyer, you're able to purchase the house, and you're right where you want to be. So if you have any questions or you want to talk to me about getting yourself an estimate to do an USDA loan, I could look up properties for you, see if they fit, do your income stuff, all that stuff for you to make sure it works. If you have any questions, reach out to me at 904-712-1500, and I'll be glad to help you out.